Welcome back to Cryptos Are Us. I'm George. Well, George. So, welcome to another market open stream. Today, I got to talk about a couple very important topics. Number one, what caused Bitcoin to go down today when it seemed like it was coming back up? In fact, last night, Bitcoin was at 98.5. Looked like it was moving pretty well and then started coming down this morning. There's one immediate reason for that. Let's discuss. But also, I've been speculating. There's been someone that's been selling over the last few weeks. Now I think we may know who that is. It could be the biggest exchange on the planet. So let's talk about that breaking news as well, and everything else that's going on in the world today. All right, let's do it, guys. Welcome, welcome, welcome. We are starting out the day right around $97,000. Not too bad. A lot of the alts are still holding on their gains from yesterday. A lot of the ETF news pumped up a lot of crypto. For example, ADA had a really good day yesterday. Litecoin had a really good day yesterday. Sui had a good day, a recovery day yesterday. So those projects held on to their gains. Bitcoin, 97 ain't bad, but like I said, we were much higher yesterday. And then we came down this morning. There's a couple reasons. The immediate reason, okay, you could see today the U.S. market is opening up in the red. But the immediate reason is this right here on the front page. And it is due to this countermeasure to Trump's steel and aluminum tariff that started this week. So this came out of nowhere during this past weekend. Trump announced that there would be tariffs on steel and aluminum imports, 25% to be exact. When that happened on Sunday, this was right before the Super Bowl, I mentioned this yesterday, Bitcoin dipped down to like 95,000. Like immediate downward dump. And then we slowly recovered back up. And surprisingly, yesterday, we recovered completely. So whenever right now there's any kind of tariff news, we get an immediate reaction. There are certain individuals that get really scared and decide to sell immediately. Right? Like, it doesn't matter if it's if it relates to any country or anything, or it doesn't matter if there's a countermeasure or retaliation. It's just as long as it's announced, there's a appropriate sell-off right away, I guess. So this is the latest from the EU. They do not like this. Although recently they just said that I didn't know this, but there's a tariff on all cars coming into the EU, American-based cars. I don't know why there is, but they said that they're going to lower that proactively because Trump has been threatening to increase the tariffs for EU products. So this may change their decision on that. But this is the reason why I believe we suddenly came down a little bit, slightly, right? Because of, again, tariff stuff. There's always tariff stuff. Trump is going all out with tariffs. This is something that he said he would do. He wants to go back to being a tariff nation, and he's throwing tariffs left and right at everything. Again, it's early to make a call whether these tariffs will do anything and if it's the right action. In fact, later today, not too long, actually in about 30 minutes, Powell will be speaking in front of the Senate, and he will be asked about all these tariffs, whether he thinks the tariffs will bring on more inflation. So right now, I think Wall Street is kind of like kind of mixed, but depending on what Powell says in about 30 minutes, it could really tank markets if he says something bad. If he says something along the lines of, yeah, I think these tariffs could have the potential to increase inflation in a big way in America. If he says something like along those lines or hints at something like that, the market's going to tank. So let's see what happens in about 30 minutes. I'll still be streaming. Well, I mean, I don't know how fast he's going to be talking, but hopefully he doesn't say anything like that. Besides him talking, there will be a San Francisco Fed president that'll be speaking, a New York Fed president speaking, and a Fed governor speaking, all later today. Everyone giving their opinions, and it's all going to be focused around these tariffs. Right now, it's just too early to call whether these are going to have a good effect, bad effect. How are they going to affect inflation or prices overall, right? And is this like the first phase of Trump's plan? Is the second phase to decrease or remove income tax or capital gains tax? That's something that he's talked about. You know, I don't know. I don't think anyone knows. That's the thing. Anyways, so we got a lot to look forward to. All right. Now, as for the bigger picture, we know that last month, specifically the last 2-3 weeks, right? Alts have been getting quite weak. Bitcoin just seems to not move, right? We've been hovering around where we are between 196,000 for quite some time. And I've been showing you guys this liquidation heat map, and it just seems like, you know, we keep bouncing from up and down, and we tend to, you know, liquidate as shorts and longs. And I always show you guys the Binance one, right? And I'm like, you know, it's either Binance themselves or some whales on Binance or market makers that have access to the order books or whatever that's driving out the liquidity. You know, I just speculated. It has to be one or the other, right? Well, this just got leaked out 30 minutes ago. It looks like it may be Binance itself. So in January, Binance, this is not counting customer funds. So Cointelegraph posted this. In January, Binance sold, if this is true, 94% of their Bitcoin reserves, 99.9% of their ETH reserves, 99% of their SOL reserves. And that explains a lot why ETH got really weak, SOL got really weak, and why Bitcoin doesn't seem like it was moving despite all the buying. They didn't sell off a lot of their BNB reserve. They only sold off 16.6% of their reserve. They sold off 99.9% of their USDT reserve too. You add all that up, that's billions upon billions upon billions upon billions. Just their USDT is close to 3 billion. You add up Bitcoin, it's like 2+ billion. I don't even know what the ETH and SOL is. Probably 2-3 billion. You're talking about 10+ billion probably, right? So why would they do this? I don't know. I was reading in comments. There's probably 2 reasons why. Number one, they're trying to make their books look really good because they want to sell. They want to make it look like they're extremely, liquid and they have a ton of cash on hand because they want to make their book look really good. So that's number one. Maybe they are getting ready to sell themselves to someone, like to Blackrock, for example. I don't know. Or number two, they think that there's a major crash happening and they want to be all in cash. I mean, selling 99.9% or 99%? Like, what reason is there? Even if you want to build cash, why would you dump nearly 100% of ETH or 99% of Sol and 94% of Bitcoin? I mean, if you want to build cash, sell half or 75%, not 100%. So it doesn't make a whole lot of sense. So I don't know. There's something weird going on. And that's assuming, first of all, okay, benefit of the doubt that this report is true. This could be completely fabricated. So let's throw that out there. I don't know who this 4AB reports analyst is. This could be completely fabricated. Let's get that out of the way. But if it's not fabricated and this is true, this would explain why things aren't moving and why it seems like every time Bitcoin is making a move, we have a sudden sell-off to liquidate the longs. It could be that the sell-offs are timed whenever Bitcoin is going up, Binance is selling. They're like, oh, it's a good time to be selling. Bitcoin's going up. It's nearing $100,000. Let's sell off some Bitcoin. Let's sell off some ETH. Let's sell off some Sol. It could be. If I was going to sell that much off, that's when I would do it. So I'm sure there's going to be more reports that comes out of this. I'm sure Binance is going to, I'm sure CZ is going to respond to this shortly. This just came out like an hour ago. So I'm pretty sure they're preparing a response for this. So we'll see. If it's true, then it does explain a lot. Maybe they are being sold. Maybe Coinbase, someone just said, maybe Coinbase is buying them. I doubt it. I doubt Coinbase will want to go through that. Maybe some big equity partner wants to buy them. Or maybe BlackRock wants to buy them. I could see someone like BlackRock wanting to buy them. BlackRock wants to own everything. Everything. All right. Recently, BlackRock increased their ownership to 5% of Strategy. And if you look at BlackRock, they literally own 5 to 10% of every company on the planet. Like everything. So, maybe they want a piece of Binance too. And this is their way of showing BlackRock how much they're worth. I don't know. It could be something like that. Also Vanguard. Vanguard and BlackRock, they literally own everything. If you guys ever have a chance to look it up, they do. They own everything on the planet. So yeah, I mean, I think it's something like that. It's like, I think they're trying to just make their books look good. I don't know. I don't think they're preparing for a nasty crash. They're trying to go all in on cash. It doesn't make a lot of sense. We'll see. All right. But, I've been saying all this selling, right? Short-term distractions. That's what they are. Even with this that brought Bitcoin down like 1,000 points, short-term distractions. We know where Bitcoin's going. We know the potential of Bitcoin. All this is distracting people from the bigger picture. And those that sell lose out on huge potential gains. That's it. And if you stay the course and you ignore all the FUD, you'll be golden. So a lot of companies, a lot of people are doing that. Blackrock is certainly doing that. Sailor is doing that. So many others. Cooler is doing that. Invest 10 million more in Bitcoin. You got Meta Planet's doing that. You have this other game studio in Tokyo or in Japan that announced $1 billion yen, which is approximately 6.58 million. They're going to be doing that. They're going to start buying Bitcoin. If you understand, you understand. Short-term volatility always happens. But if you truly understand the scarcity aspect of Bitcoin, and you understand that all fiats are designed to fail, they're essentially Ponzi schemes. Central banks are not looking out for your best interests. If you understand these concepts, then you understand that Bitcoin is the asset to hold literally forever. And the more of it you hold, the better you are. That's really it. Even companies now recognize that. States recognize that. Countries are starting to recognize that. And there's only 21 million that will ever be. 19.8 million has been released. There's not that many to go around. In the future, even having 0.1 Bitcoin is going to mean a lot. If you have a whole Bitcoin, it's going to put you in the upper echelon of the 1%ers. In the future, if a country or a state wants to buy one Bitcoin, it's going to cost them tens of millions of dollars someday. So even having one means a big deal. But you could still accumulate that now. It's expensive. It's $97,000 to accumulate one. But it's a lot cheaper now than in the future. So keep that in mind. There's only 21 million. And how many people are there on the planet? 8+ billion. And then that doesn't count all the companies that will be buying. How many companies are there? And how many funds are there? How much liquidity is there? We're talking about $100 trillion plus. And that's only increasing because every single country is printing more money every single day. Just think about all that. Just a little bit coming into Bitcoin will drive prices into the millions. So that's why this graph right here is the way it is, and why it's so alarming that the new whales are just overtaking the old whales so quickly, because they are realizing that they have been missing out and they're playing catch up really, really quickly. Really, really quickly. All right. I did mention about Binance. This is also happening with Binance. This could be a good thing, but this also plays into the fact that this may be why they're doing what they're doing, and they may be preparing to sell themselves. So they have this battle that's still ongoing with the SEC. And the reason being because SEC sued them for listing securities that they listed back in 2023, such as Solana, Cardano, Algorand, and others. But the definition of securities have changed since then because of the Ripple lawsuit, and because now we have a new crypto task force. There's a new framework and definition guidelines being created. So if it turns out that Solana, Cardano, Algorand, and all these are not securities, then this lawsuit basically goes away. It doesn't even make any sense, right? So that's why both sides have decided to pause this, and it could be dismissed altogether. And again, this could play into why Binance has been dumping all their assets, because if they win or this is dropped, then it's a perfect scenario for them to sell themselves to someone, or at least a portion of this themselves to someone like Blackrock. All right, what else is there? CZ also says their token listing process is broken. Yeah. So he now recognizes that when they announce that they're going to list something and then they list it 4 hours later, that process is broken, because between the announcement and the 4 hours, it gets pumped to the moon and then people dump it on Binance. That has been happening since 2018. It took them 7 years to realize that has been happening. Again, everyone knows about Binance effect. Everyone knows about the Coinbase effect. As soon as something is announced that it's going to get listed, it pumps up to the moon. That's not a new concept. So for him to now recognize, oh yeah, that's broken. We need to fix that. Okay, CZ. As if you didn't know that 7 years ago. Again, maybe because they're trying to prepare to sell themselves. So things are, being buttoned up. Dave Portnoy also, I don't know if you've seen his videos recently. He's been endorsing the fact that he's really good at shilling meme coins and making a boatload of money by doing so. Again, he's been doing this since 2018, 2017. He's pretending like he doesn't know what he's doing. He was in those, some of you guys were around back then, but he was in SafeMoon, which was one of the very first meme coins out there. And that project failed miserably. But he was pumping SafeMoon back in the day. And he lost a boatload of money on it. And then shortly afterwards, he lost a boatload of money on Bitcoin. So it's not like he doesn't know what a meme coin is. And he's been to Bitcoin conferences. He even spoke at Bitcoin conferences. Now he's like pretending like, oh, I don't know I have pump power. If I tweet something out, it pumps up and I'm making money. As if he didn't know that since 2018, since he's been doing that with SafeMoon. Again, it's like people pretend like they haven't been in crypto for like 7 years or something. Anyways. And then lastly, Proton Mail launches self-custody Bitcoin wallet. So that's good. Proton Mail is like a mail service a lot of people use if they want to stay anonymous. So it makes sense. Now you could create, anonymous email. And if you want to create anonymous Bitcoin wallet along with it, that actually makes a lot of sense. That makes a lot of sense. All right. That's pretty much it. That Powell testimony in front of Senate should be starting in like 5 minutes. So I think everyone is waiting to hear what he has to say right now. It's live. Let's see. Let's see if he starts speaking yet. Four minutes. I guess I could stay on for 4 more minutes and do some Q&A and watch him talk. Hopefully he's not very bearish on all the tariffs. If he is, the market is going to dump like crazy. Let's hope he's not. Even if he thinks it will, let's hope he doesn't come off very bearish. Oh, by the way, I just got this. Binance customer support answered, not CZ. They responded to this Cointelegraph post and says, Binance is not selling assets. This was simply an adjustment in Binance's treasury accounting process. User funds are safe as always. This was simply an adjustment in Binance's treasury accounting process. How? I'm no accountant. How do you adjust something down 99.9% away? Especially when it's like USDT or ETH or SOL. Are they moving assets? I don't know how you adjust something down like that much. I don't know. That maybe they're just moving it. I don't know. I need more clarity. We need CZ to chime in. CZ needs to answer this. I'm sure he's working on it. CZ is usually pretty good at responding to a lot of FUD. This could be complete FUD. I want to make sure that I'm portraying that this could be complete FUD and they're not selling anything or they haven't sold anything. But, you know, I don't understand this accounting process where they discount things 99.9%. All right, we got a minute until Powell testifies here. While we wait, Lakers looked good yesterday. Lakers have been looking really good. They won 9 out of the last 10 or 10 out of the last 11. LeBron is playing like he's like 30 years old again. Luka actually, you know, it's funny. They said something. Luka is 15 years younger than LeBron. 15 years younger. And LeBron yesterday played like he was 15 years younger than Luka. Luka did not look like himself yesterday, and he did look a little bit out of shape. All right, let's see if this starts here. By the way, I don't know if you guys saw this. This has nothing to do with crypto, but this sounds really, really, really bad. Trump signs an executive order that pauses enforcement of foreign bribery ban. So now, American companies and foreign companies can bribe officials of foreign governments to obtain or retain businesses, and it's now not illegal. So, for example, if you're Google or Microsoft or Amazon or OpenAI, you could go bribe Chinese officials to open a business in China. Or you could bribe some official in Europe or Africa or South America. It used to be illegal. You can't bribe foreign governments to create a business. But now you can. That just sounds so wrong. Hey, breaking. Fed Chair Powell says central bank doesn't need to be in a hurry to lower interest rates. How come I was... Okay, there we go. Did he already get done talking? It just started. How did they even announce this already? All right. In remarks before Senate Banking Committee, Powell called the economy strong with a solid labor market. Inflation still easing, but still above the goal of 2%. We know that reducing policy restraint too fast or too much could hinder progress of inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity. Okay. So he didn't say anything about. He didn't say anything new. He didn't say anything about tariffs. That might be it. Maybe he's not talking about anything else. Or maybe now he's being grilled. He may be being grilled by the Senate committee. I guess we should listen to this. Hold on.
Focus on climate change instead of supervision.
I don't know who he's talking
in March,
to right now.
Just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our
Powell needs to lower Shanty Clip says Powell needs to lower interest if he keeps quantitative easing going. QT raises bond interest by removing liquidity, so to counteract rates needs to drop.
The fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government,
is he even addressing Powell, or he's just like addressing the nation?
No
I don't even get what's going on here.
For your actions.
Is Powell not even being
pressure a bank
questioned?
To cut off services to digital asset firms, political figures, and conservative aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the
maybe it's already done. Maybe he just addressed them and that's it.
Argued
and this is just something else
now. The Basel III
endgame
proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes.
I feel like
as a fair
Chairman
referee.
Scott really likes listening to himself
ready
talk.
To clean that slate, start afresh, and focus on a healthy
just
economy.
way too many words for an opening statement.
Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk
Does she
fees
have a question?
canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated.
What is the point of this? Just to listen to her talk?
Some extremists have a different view about what
There's only two people sitting in a chair.
But under the law right now,
Chairman Scott and Warren, that's it. There's no one else there.
Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate
of promoting
maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress.
Finally.
Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
All right.
Thank you, Chairman Powell.
Questions?
Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating. But in the end, my goal is to make sure that the American people, specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks.
Crypto.
Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve's supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir.
That's
Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues.
All right, guys. This is going to go on and on and on. If you guys want to watch more, you could go straight to CNBC and watch them talk to Powell. A whole bunch of nothing, but, you know, it's interesting. Very first question from Mr. Scott, chairman. He is part of that crypto task force. Not task force, but he is part of that new group that's part of that's working with crypto czar David Sachs on creating that new framework for crypto. So I forgot to put the 2 and 2 together, but that's why he asked that question. It's pretty good. Anyways, I'll let you guys go, but you know, we need more clarity from Binance, and also the EU and the tariff situation isn't helping, but maybe Powell is going to address the tariff situation as long as he doesn't think that tariffs is going to make inflation worse. Then the markets today should be good, but I guess we'll see. this is probably going to be ongoing for another half hour or so. All right, guys, I will see you guys tonight and reflect more on what he is saying now and everything else that will occur today. All right, have a good one, guys. Take care.